CEO confidence is down. They're holding back on CapEx decisions. CapEx means investing in a factory, investing in a new plant, investing in a data center. Meta said they're pulling back on data centers. So everyone's paused and in their turtle shell, and that is going to create a self and an own goal.
Yeah. One question I have is how, what could Trump and the administration do to convince people that this is now the plan? Because again, I mean, one narrative that I'm seeing sort of in the air supply a little bit is that all of these tariffs are kind of a negotiating ploy to try to encourage all these countries that own U.S. debt to convert to century bonds and lower our debt burden, lower the price of the dollar, which would theoretically stimulate the U.S. export economy. But then that goes back to the conflicting goals of onshoring manufacturing, but the cheaper dollar. Those two it's a yin and yang thing. So I really, I'm still wondering, I guess, just thinking of this conversation, are tariffs the end goal, or does he have an even bigger end goal at that point?
Hey everyone, welcome to Bits and Bips, exploring how crypto and macro collide 1 basis point at a time. I'm your host, James Seyffart, TradFi Archmaester, Lord of Bloomberg's End. I'm here with Ram Ahluwalia, Maester of Wealth, leader of Lumida.
How's it going?
Also with Stephen Ehrlich, High Scribe of the Unchained Kingdom.
Hi everyone.
Today we're also joined by Quinn Thompson, Master of Macro at Lecker Capital.
Good day.
We're here to discuss the latest stories in the worlds of crypto and macro. Just remember that nothing we say here is investment advice. Please check unchainedcrypto.com/bitsandbips for more disclosures.
Crypto moves fast. It's why Bitwise launched the weekly CIO Memo, a jargon-free summary of what's moving crypto markets, written by one of the best in the business, CIO Matt Hogan. Get up to speed in 5 minutes or less. Check it out at bitwiseinvestments.com/CIO Memo. Carefully consider the extreme risks associated with crypto before investing.
Quick little update before we dive in. Unchained is also launching a new newsletter. It's going to be called the Bits and Bips newsletter. Stephen will be mainly manning that fort, it sounds like. So we'll hear a little bit more about that. It's going to be updates and topics that we're mostly covering in this podcast. And sometimes we don't get to everything that we want to talk about. And this will be a newsletter that gets into some of that stuff. Before we get into Trump's speech, his Liberation Day announcement of tariffs, Quinn, why don't you, for those that don't know who you are, you're a pretty well-known person on the podcast host, I feel like, in crypto and macro circles. Regular guest on last week I missed. Felix was on with us, who's your co-host. Why don't you give us a little background about who you are, what you're doing, where you came from, and then we'll just dive right in.
Yeah, sounds good. Thanks. Great to be here, guys. First time caller, long time listener, first time caller. So I run Lecker Capital's global macro hedge fund. We kind of invest across assets, try to make money in every environment, and different than most macro hedge funds, have a much larger focus on digital assets and Bitcoin and crypto, as with the view that a lot of the outsized returns in the coming years and is going to come from technological innovation in the crypto world. So yeah, we cover a lot, and I've had some good takes recently that have gone against consensus. So I'm pumped to debate here.
So accurate takes. Before we get into that, actually, I have a quick question for you. What's the background of the name Lecker Capital?
Lecker is a Dutch and South African word, means like good vibes. It just kind of a positive word. You can it's a slang term you can ascribe to anything like the food or the weather. So it carries a fun and uplifting spirit to what we do.
All right. Awesome. All right, I'll turn this over to Ram to start us off, but really let's just get into what Trump said, what his announcement entailed. I mean, this is a really good topic for like a conversation here, because I feel like tariffs are like a lightning rod issue. Like, people love them, most people hate them, and a lot of people have very differing opinions. So Ram, why don't you go into what Trump said, and then we'll get into what your views were, and then we'll go around the horn.
Right. So Trump framed it as kind reciprocal tariffs. One, he oriented around American history. He said, look, from 1789 to 1913, the United States was backed by tariffs and was proportionally the faster growing economy in the world. Then he talked about the history of revenue generation. He cited the income tax roll in 1913. He talked about the Depression, and tariffs, but did not really take the generally accepted, in my view, correct view, which is that tariffs exacerbated the depression. Then he said, look, we cannot continue a policy of, quote, economic surrender, that he's standing up for the American worker. He talked about the greater foreign ownership of American assets. He also cited specific industries. He said, in pharma, we cannot, quote, produce enough domestically to treat our sick, end quote. He discussed how phones and electronics and semiconductors are produced overseas. He talked about how China has a large shipbuilding industry. He described this as, quote, not merely an economic problem, but a national emergency that threatens our way of life. Then he laid out 3 demands. He said, 1, drop your tariffs and barriers. 2, stop manipulating your currency. And 3, start buying American goods. So that was really, the main of his commentary. Really leaned in heavily on the tariff talk, and I'm sure you'll talk about the market reaction.
Yeah, I mean, the market did not like this, to be to be blunt. I mean, the S&P 500. Actually, he started talking, and until he got to it kind of sounded like he wasn't going to do some of the worst of what people thought he was going to do. And markets rallied actually in the post market initially, and then things just got way worse. And we're down over. I mean, I haven't checked in a little bit, but we're down over 2% since he started speaking. In the S&P 500, which if you're a crypto guy listening to this, you're like 2%, who cares? But for the S&P 500, that's a big move for a move in just a matter of a few minutes. The other thing I would say that you didn't mention, that he kept saying they are going to pay, but really at the end of the day, it's not the people who are paying at the end of the day. It's going to be passed on to U.S. consumers. It's the people importing those goods that are paying that tariff, not necessarily the people making those goods overseas. Now, granted, we can debate about what that is, but he has his messaging down as though this is going to be borne by other countries and not borne by us. And I mean, I think if his ultimate goal is to get rid of some of these tariffs, I mean, also some of those numbers he put out there that other countries were placing tariffs on us seemed very inflated from my just immediate eyes. I'm not enough of an expert, but I would love to know what estimates he came to for estimating how much currency manipulation there is for some of the numbers he put out there. But yeah, let's go to you, Steve. We haven't really gotten to talk to you at all. What was your visual thoughts and anything you disagree with?
Yeah, I had a couple of takeaways from this. One short, one kind of longer. I mean, for one, I think it's hard to take everything that he said here at face value. I mean, notwithstanding everything that you guys just said, but he's going to get lobbied by all sorts of industry groups, and I would be stunned if there's not if some of these become almost like sieves in a way, where there's going to be loopholes and delays and so on and so forth as the market digests it. So all the fluctuations we're seeing right now, that could change by this point tomorrow. I mean, he's reversed himself on tariffs sometimes in the same day. But the bigger takeaway that I had, and I kind of come with this, I mean, as you guys know, my background is actually, aside from business, is in international relations, the international political economy. And in many ways, this kind of rang as a rejection of sort of the entire post-World War II, Pax Americana, liberal world order. And I mean, he's been hinting at it for a long time, but now he's really kind of said it. And we might be going back decades to a period of more great power competition, global insecurity, and that frankly is worrying, because I know that the United States, we'd like to see ourselves as the benign hegemon, a power for good. I know we have not always lived up to that standard, but I think overall it's been good for the U.S. to sort of play this role, and retreating from it, which has sort of manifested itself in all of these tariffs, is a dangerous thing. I mean, I can kind of get into, what does this mean for Bitcoin and other stuff that is beyond a little further down the line. But those were my initial takeaways, because again, Trump 45, some people could dismiss it as a fluke. Trump 47, this is the trend.
All right, let's go to you, Quinn. I guess how much of this is him? My initial read on this is they're front loading all the bad news for the market as quickly as they can from his inauguration, to hopefully this gets sorted out by the time midterms come around. I mean, we don't need to get into this right now, but there was basically a complete rebuke of Elon Musk and what happened in Wisconsin this past week. There was a huge backlash, a huge support from the Democratic voters. And I feel like this is just like something he's like, he knows it's going to be bad for markets. He wants to get it out as quickly as possible and hopefully like settle down going down the line. But Quinn, what was your initial reaction to what Trump announced today?
Yeah, I generally agree with that. I mean, I'm just wondering when the market's going to take him at his word, when every single thing he does and that the administration does follows the rhetoric word for word. And the only thing that goes against them are fake news headlines reports. Like, and then everyone acts surprised. It's like the things we've gotten in crypto for the last 2 months of these massive sell the news events that some, big announcements coming and the market falls for it. It's like, I can't believe it.
Quinn, real quick. So analyst earning revisions have been negative almost 2 months in a row. So analysts are walking down S&P earnings and the market's declining in lockstep. So institutions are selling. They're selling into those rallies. I think it's retail investors are on the wrong side.
Yeah, I mean, or you can look at, Bitcoin, I think, is up to like a 7% intraday swing. Stocks are at like a 4% or something intraday swing. So I'm sort of talking about the event specifically. My take is that I tweeted this out, which is, and how I approach this situation. If like the positive vibes coming in from people were around, there's going to be deals, everybody's going to settle, they're going to bring theirs down, we're going to bring ours down. But that doesn't, to me, accomplish what they have been saying since day one they want, which is reshoring and bringing manufacturing back. If everybody drops their trade barriers and tariffs, our domestic production is still at the competitive disadvantage for the initial reason why these producers and manufacturers and jobs went overseas in the first place, which is for lower costs. So from that perspective, you're sitting here and you're like, okay, because you had the headlines of Israel dropping theirs and Canada saying this, but that doesn't accomplish what they've been saying they want to accomplish, which is reshoring. So like there was just, to me, a no-win going into it. And yeah, it's everything that the Trump admin wants to do is not Wall Street friendly. We just came off a year in 24 where every single thing done from the Fed to the Treasury to the White House was to pump markets going into election. And now, they're taking national security and domestic supply chains and reshoring and the middle class seriously, and they're following through on it. So I'm not surprised at all. And it's not good for asset prices. It's not good for growth. It's just, yeah.
I would add to that. There are these internal contradictions in the policy. You identified one of them. There's a goal to have onshore manufacturing. It's not clear how you can drop down reciprocal tariffs. That's your goal. But there are other objectives. One goal is to sell American debt and treasuries and refinance the U.S. maturity wall. The way you do that is by importing dollars and handing China or other countries dollars so they can turn them by bonds. And China financed the U.S. deficit. We sold them bonds at 1.5% interest rate, below the rate of inflation, stuffed them with these bonds that are now sitting on losses, which is a great deal for the United States. So that's yet another, contradiction as well. And then you talk about, these countries have to quote unquote stop manipulating their currency. If a country lowers their currency, it makes their products cheaper for Americans, which means you're importing disinflation, which enhances the real incomes of Americans. 30% of lumber used to build American homes, which are extremely expensive, come from Canada. 30%. And the cost of materials building a home is comprised of labor materials, and lumber is right up there. So it's another internal contradiction to the policy statement. These objectives sound good on a one-off basis, but creating a coherent framework around that's lacking in what we're saying. That's why markets are selling off. This is economic 101 that we're missing here.
Yeah, I couldn't agree more. The idea of, he wants onshore manufacturing, he wants a strong economy, but he also wants a weak dollar. Those two things seem to just be very contradictory to me, and I'm not sure how he's going to be able to sort of thread that needle.
No, those are. Yeah, my point is just I don't really have opinions on it because my opinion doesn't matter. My view is just that every
matters,
my view is just that
be right as far as his trades. That's all he cares about. Which is
my view is just everyone remove all the politics, the motives, the this and that is just it's not that he wants to crash the markets. It's that the byproducts of his policy objectives are bringing markets down. And I think actually on the dollar front, this is one of the reasons we're long energy. We view energy in a couple neighboring emerging markets to be the most interesting places to have longs on, because all of this is inflationary. All of it is both inflationary from outright cost of production, cost of goods, cost of labor. I'm more focused than or have been prior to this on immigration going from 1% per year of our population to 0 overnight. That's extremely inflationary. So you have that, plus you have lower growth, which then weakens the dollar. And to your point, Ram, I think that's where the rubber hits the road in all of this, is when the debt ceiling gets lifted and they can no longer rely on TGA and RRP and have to go out and sell this debt. And that's where I think the problems are going to lie. But because it's not here yet, they can yield the sword, I
want to bring it back to Stephen's point and connect to that observation, Quinn. So, one observation to make is, first off, the American economy grew after the American Republic was founded due to the Industrial Revolution, things like the cotton gin and steamboats, and massive immigration. That's what drove the growth of the American economy. It wasn't tariffs. It was despite tariffs. And those tariffs, to your point, were paid by American consumers and merchants. You can fact check that on Grok, which was built by Elon Musk. Okay. So, and to Stephen's point, what we're really going back to is this concept of zero-sum great power as opposed to alliances. And the idea is that in this new world order, you must control the asset as opposed to having a trading partner. So if you want uranium, you could trade with Canada. Now it's like, no, you must control the uranium. If you want French wine, I don't know how you fix that problem. You can't get that problem. And it really is this mercantilist thinking. It's a zero-sum thinking, which is not accurate. These costs will be borne by one of only two parties. Either consumers will pay the costs in terms of cost increases, and the vast majority of earnings transcripts, we read dozens of them, they will attempt to pass through to the consumer. Those that cannot will eat the cost. So suppliers of services, maybe building supply materials, maybe automobile companies, they can't pass on the cost. They will eat it, which means lower earnings. And stock prices follow earnings and earnings growth. So either you're getting inflation or you're getting earnings. And that's called earnings declines. That's called stagflation. By the last time the United States had a trade surplus was 1975, the year after OPEC, which is an inflationary stagflation environment. I'm not saying we're going to get that same period, but we are getting a mini echo of those dynamics.
Yeah. And Ram, as you I actually just published a story on stagflation and the potential chances of it and how certain assets would decline. Obviously, I focused on Bitcoin in particular because Bitcoin has come decades after. And I think the stagflation concern is very real. I mean, we all remember Chairman Powell's comments after last FOMC meeting. I mean, they're worrying about rising prices and slowing growth. That doesn't necessarily mean we're going to go back to the Arab oil embargo, which was traumatic for everybody who remembers it back in the day, which does not include probably hardly anyone that has invested in crypto, at least before the beginning of last year. But it's a dangerous time. And I forget who said it, but Trump kind of front loading the medicine here. I don't think he has as much time as maybe some of us are thinking. I mean, midterm elections are going to be here sooner than we know it. The campaigns are going to be starting very soon. And he, I know he's been musing, or maybe now more than musing, about a third term, but I mean, unless there's some sort of resolution to that, he's not going to have a lot of time to turn this around, especially given what happened in Wisconsin. So I'm also very curious, again, to see how much he's going to stick with this if markets continue to go down. I've been surprised at sort of how steadfast he's been, given what's been going on across all asset classes pretty much since the beginning of the year. But it's going to get tougher for him because he's going to start feeling pressure from congressmen and women who are worried about losing their seats in next year.
I'm going to share screen here. So two things on what Quinn was saying about how people need to start listening to what Trump is saying. I tend to agree. Like I was the first person to say I was like, take Trump seriously, but not literally. And maybe we should actually be taking Trump a little more literally this time around than we were when he was 45, right? So that's the first thing I wanted to say and echo kind of what Quinn was saying, because he's explicitly said what his goals are. As Ram said, some of those goals are at odds with each other. But I'm sharing here, Zero Hedge tweeted out like the images of like exactly what the reciprocal tariffs are going to look like. And Quinn said, we can't go to zero if his goal is actually onshore manufacturing. And based on these images, which I guess we still don't have all the complete information, like the minimum here is 10%. So it looks like he just plans to impose like at least a minimal level of tariffs on everyone. I'm sure maybe there's some way you could get rid of them, but like the minimum number is some number, which obviously could go to some of the issues and concerns that everyone is talking about, including all four of us here on this call.
Another contradiction, by the way. So he cited in his opening remarks that trade deficit has increased foreign ownership of American assets. But now he also cited the wins from having SoftBank invest in the United States and other foreign countries that's increasing foreign ownership. You can't have it both ways. And by the way, when you have a trade deficit, you are importing capital. They are one and the same thing. You're handing China dollars when you import, and China can only buy bonds with that, or they can import product from Americans, but they're not going to import F-35 jets or GPUs. So what do? They buy bonds. So there's these internal contradictions that are in the policy. And to Stephen's point, I agree. Look, they got to turn it around quickly. And the risks are more elevated than 2018. I see a lot of charts on Twitter, people looking at, here's Trump tariffs 1.0. The difference is that in 2018, the valuations for the S&P were around 16 times. In Q4 18, which was one of these trade wars, they troughed at 14 times. We're at 20 times earnings now. So higher valuation, and earnings growth in 2018 was stronger, and you had a disinflationary backdrop. None of those conditions are in place today. So I agree. I think they've got to turn around. And the other part is, if this economy continues to weaken, and it is, we're finally seeing cracks in the consumer. You look at the job and openings starting to decline, challenge report, you're going to have a collapse of revenue. You're going to have less capital gains tax. That's going to explode your deficit. You will lower the 10-year rate. You're seeing the 10-year drop now to 4.1%, but it still isn't where it was in September when it's 3.6%, because other assets are competing for capital. And it's you're not going to get the refinancing benefit that you thought you would, especially if you're putting up trade barriers, because you're not putting dollars in the hands of foreign investors that would otherwise buy American bonds.
Yeah, I mean, our number one export is dollars and treasuries, right? Like that's the one thing that we export around the world without question. And the thing I do want to say, I said that like it's the American consumer that's going to pay all these taxes. That's not completely true. I guess I should say it depends on like the elasticity of those goods. The people who are producing could end up eating some of that, and the whatever percentages there are could change. But like for the most part, the American consumer is going to eat a lot of whatever these tariffs are, potentially if they're not lowered.
Yeah, just say I would question why he has to turn the. I don't know if I buy into like this idea of having to turn the ship around ASAP, because for all those reasons, Ram, that you just laid out of why the market is vulnerable at these valuations has nothing to do with him and everything to do with the previous administration's policies to pump asset prices. So, in my view, he's fast forwarding. I agree. They're doing a not so eloquent job of storytelling as to why, they're going about it this way, why they're engaging in trade policy, trade wars, etc. But I think they're just trying to fast forward what was inevitable. Like everybody here agrees that 22 times earnings for the S&P 500 is, at all-time highs and not sustainable. And also, truth be told, the reason he's doing this is not for all of us asset owners and the people sitting in New York City. It's for the bottom 50% who don't own any stocks and kind of could care less anyways. So I agree I understand the headwinds they face in enacting this policy, and which is why I don't think they will be able to see it through for the full term. And I do think there will be pain handed to them from the market. The revenue reason that blows out deficits, as you mentioned, is huge. There's other things. Inflation likely comes back. But I do think, taking them at their word and their efforts being more steadfast than everyone's thought is maybe prudent, because that the whole reason they're doing this is for not the asset owners.
I don't think it's inevitable. Look, there was the QE and 10 years of ultra low rates led to the strongest 15-year of equity market returns we've seen in history. And that was before Trump, no question about it. And wartime deficits before Trump and didn't make any sense. And the CHIPS Act didn't make any sense either. And Europeans not paying for defense didn't make any sense also. It's a lot of things that didn't make sense. However, you've got a policy mix full of inconsistencies. You've got CEO confidence low, consumer confidence is low, and you've got cost push inflation, which is going to hurt real incomes. It's going to hurt Main Street America. It's going to increase the cost of housing. You privatize Fannie Mae and Freddie Mac. I'm all for that theoretically as a free market capitalist, by the way. But those mortgage spreads are not going to come down. And markets are built on psychology. Psychology is layer zero. It's the base layer. The multiple in the markets is a product of psychology. So this is taking a wrecking ball to psychology. That's a lever in Trump's control. The market bottomed in December 26, 2018, the end of kind of trade war Trump 1.0. Two things. One is Powell caved on those Fed adjustment hikes. But on the same day, Trump also said, go buy stocks, are cheap. So, the voice of leadership matters. And so I think, you could have a market that wouldn't run up 20%, but would run up on earnings growth with the multiple being maintained with a more rational economic strategy, such as keeping tariffs on China because there are legitimate reasons to do so, but not on, say, Mexico and Canada, where the cost of an automobile worker in Mexico is $10,000 per head, and an American auto worker is $70,000, and takes a long lunch break, has a compliance supervisor and OSHA work standards, and other things.
Hi, I'm Matt Hogan, CIO of crypto asset manager Bitwise. Look, crypto can be confusing. There's so much noise, and the space changes so quickly. That's why, every week, I write a 5-minute memo on the biggest stories impacting crypto, in plain English. Why is Bitcoin up or down? What are people missing? Where should investors look next? Get the lowdown every week. Sign up to get the weekly CIO memo delivered straight to your inbox. Go to bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo.
Carefully consider the extreme risks associated with crypto before investing.
And I think it's also, Quinn, just what you said, I think it's pretty simple. Maybe Trump isn't to blame for all this, but psychology matters, and everyone kind of was in agreement that the Fed had sort of orchestrated a bit of a soft landing coming into the end of last year, and that Trump took over a pretty healthy economy. So all of this is
I totally disagree. I totally disagree. I think the economy was, on all accounts, faltering massively headed into this year.
Unemployment is still close to full employment. Inflation is 2 to 3%. I don't think Biden deserves blame for double-digit inflation that Trump likes to remind people for. That had to do with supply shocks from the pandemic, and it's tricky. The psychology of this really matters. And
but wouldn't you say, Quinn, that I believe this is a self-own? Yes, I agree with you that in Q4 there was softening. There's no doubt about that. Okay, but this is a self-own, right? The consumer is weakening. If you look at the transcripts, lower end had been weak, middle income is weak. You look at Walmart on the earnings transcript is seeing high-end consumers shop at Walmart now. Target's never been cheaper. I'm not saying go buy Target, by the way. I think retail is laying off staff. So, this looks to me like a cell phone that's going to actually hurt revenue, hurt growth. I just think the policy mix is kind of inconsistent. I'm all for the deregulation. I'm all for the tax cuts. I'm all for eliminating fraud, waste, and abuse, and putting more control in the hands of local and states and individuals and businesses. We haven't even seen those benefits yet. That's not even in view right now.
Look, I wouldn't go about it this way. So I'm not necessarily an advocate for this strategy. But I guess where I probably differ is the zoomed out, holistic approach of what's feasible given the constraints that this administration is working with. To me, the sequestered RRP reserves, $2.4 trillion post-COVID, in combination with the Treasury and Treasury's active issuance management and all these sorts of liquidity games behind the scenes are what's responsible for the U.S. economy resilience, the strong dollar and asset prices and our economy. So all those were going away, and those aren't necessarily like a Biden thing. It's just the facts of what existed. And so for me, it's just a view that the only way to sort of achieve what they want to achieve is there's no, like, if you go back and plot budget deficits, U.S. budget deficits and stock market performance, there's no way to go from 6 to 2 without stock market hurt in a reasonable amount of time. Okay, in 8 years, if you did
reversal of fiscal dominance is what you're saying.
Yeah, there's structurally, it's impossible. Like the economy was on fumes, propped up by the government spending. And if that truly is their goal, which I strongly believe that Besson is the most capable Treasury Secretary to have that role. And I believe that Trump listens to his admin much more than people think. He is not smart enough to put these numbers on each, partner, et cetera. I think he listens to these people way more than people think. And I think this is their goal. And I don't see a world in which they can balance the budget, keep multiples at 22 times forward earnings. I agree I agree. But then when you kind of look, and I agree, all of the good has been backdated. We haven't gotten into any of that. But if you then think about it from a strategic perspective, do I want to shoot all my good bullets now, or do I want to save all those for end of the year in 2026?
You want to match fund. It's like a revenue recognition. You want to time the benefit to the expense and have a smooth transition and project clarity. When people don't have clarity and they can't make long-term investment decisions or household decisions, then they pull back and they retrench and they don't hire as much. So what you saw from like the JOLTS data is that the turnover in the labor market is coming down. By the way, I'm all for laying off federal workers that are unproductive. There's a comment here saying, but Biden stacked the deck by hiring. Look, if you put productive workers in the private market and they get a job that creates economic value, I'm all for that. If you have a labor market that has high turnover, generally the economy creates and destroys 3 to 4 million jobs per month in a normal economy. Now we're creating and destroying about 2 million jobs per month. It's getting lower. So the ability to absorb layoffs is diminishing, and that's a problem. That's what I mean by the approach, right? CEO confidence is down. They're holding back on CapEx decisions. CapEx means investing in a factory, investing in a new plant, investing in a data center. Meta said they're pulling back on data centers. So everyone's paused and in their turtle shell, and that is going to create a self and an own goal.
Yeah. One question I have is what could Trump and the administration do to convince people that this is now the plan? Because again, I mean, one narrative that I'm seeing sort of in the air supply a little bit is that all of these tariffs are kind of a negotiating ploy to try to encourage all these countries that own U.S. debt to convert to century bonds and lower our debt burden, lower the price of the dollar, and create something akin to a Mar-a-Lago Accord, sort of a revamp of Bretton Woods, which would theoretically stimulate the U.S. export economy. But then that goes back to the conflicting goals of onshoring manufacturing, but the cheaper dollar. Those two it's a yin and yang thing. So I really I'm still wondering, I guess just thinking of this conversation, are tariffs the end goal, or does he have an even bigger end goal at that point? And with so many different variables at play here, how is he going to stay the course? I personally don't believe that this is the right course to take. Like, autarky just in history is not something that I think has been successful, but he is the president right now, and this is his policy. I don't want to see people lose their jobs and lose their incomes and and really struggle. So I hope like he is successful in this. But CEOs, I mean, when they build factories, when they put together business plans, they don't think in days or weeks or months. They think in years or decades. And I mean, at best, he's going to be president for another 3.5 years or so, maybe more, depending on what people say. But
Look, the policy is called FAFO. That's what it's called. Okay, this is FAFO. It's a lot of contradictory policy thing. And you see what happened. Like, I like the iterative approach of the administration, which we saw in the first 2 months. They'd float a concept, see the market reaction. They would say that, want to see what the market has to say. I actually like that. It's very startup oriented, being nimble, responsive to the market. But I think for tariffs, I do believe Trump genuinely believes he's charging other countries. You know, he said it multiple times in every speech, quote, "We are charging them," end quote, quote, "They are ripping us off." The reality is tariffs are a sales tax on American business or consumers. That's what they are. The reason why Mexico doesn't want to add tariffs is they don't want to tax their consumers. By the way, I researched ahead of the call, what can Mexico do to come into compliance and lower tariffs? Mexico doesn't have tariffs in the United States. What are they going to do? Of course, they should interdict fentanyl, and those have dropped. And yes, it's a real issue, and they put troops on the borders, and that's a legitimate concern, right? These are complex topics with different trade-offs. But I think, you know, Trump read American history. He read about William McKinley. He read about, hey, tariffs were around this period when America was growing, missing causality around industrialization and immigration, and what Alexis de Tocqueville wrote when he was, you know, touring America. And, you know, I think he and Lutnick legitimately think they can eliminate the IRS. I'd love to eliminate the IRS in some way. Okay, can we figure that out somehow? Right? But this is not the way you go do it. This is not the way you go do it. I do think that, you know, they believe this is how economics works. And the thing about balance of payments, it's complicated. This is one step below quantum mechanics, because when you look at a trade deficit, you see it as, oh, I'm losing, when in fact, the trade deficit has coincided with American economic growth and dominance, because it reflects productive investment opportunities in the United States that the world is clamoring to access. No one wants to invest in Turkey, which is a mess. You know, Russia was a mess even before this war, or Europe. 70% of the average family office invests in the United States. That's why we also have a trade deficit, because if you want to buy an American capital asset, a bond or a stock, you can only do it by not buying American goods and services. You take those dollars that you receive from American imports and instead you buy American stock, which makes American entrepreneurs wealthier. So when SoftBank invests dollars in the United States, they are going to have more ownership of Stargate. But the entrepreneurs building that, they've got far more levered equity to the upside. That's the part that people are missing.
Yeah, I want to echo something you guys were talking about messaging. I mean, we talked about how this administration has not been great at messaging. They should just have Bessent do all of the messaging when talking to the market. Because I'm with Quinn. Like he talked about one of the most capable people. Every time I hear him talk, I'm like, man, they should just let this guy explain all their policies. So I mean, sometimes you can tell he's trying to back into trying to say what Trump wants him to say and doing the best he can to realize it. Because he knows what these impacts are. He knows the things you just said, Ron, right? He's not somebody that like thinks this is all quid pro quo and it's one-on-one. Like there's a lot of impact here. The other thing I want to go back to is like the numbers. The more I look at those numbers and those charts, like these numbers are completely blown up. This is like typical Trump art of the deal. He's saying you're charging a 78% tariff because you have this other tax, or a VAT tax is equivalent to a tariff, or this is currency devaluations. I think he just wants to negotiate with everyone and come up with something. And I really do think the end goal is to bring some sort of manufacturing back home. I just don't know if I guess from like a U.S. security perspective, it makes sense to have certain things not be like everything being outside of the country. So maybe you could do it. There could have been a different way to do it, like funding different things or supporting it in different ways.
So Puerto Rico, I was just there a few days ago, they have a leading pharmaceutical hub. Guess what? They're a territory of the United States. Second, Mexico is our neighbor. We've got to move production away from China. They're committing atrocious acts of cybersecurity hacks and espionage, and they don't stop. So yes, we got to wean ourselves off of China. And it's important and in the interest of American national security to have a thriving Mexico. Otherwise, the primary export of Mexico will be fentanyl, and you'll get more illegal immigration. So, you need Mexico to be a part of this. If you want uranium, you got to trade with Canada. If you want cheap lumber, Canada's a part of that equation also. So it's what you mentioned, actually, Stephen. It's really going back to this great power concept around assuming you need control of the asset when really you just need access to the asset. Think about like the sanctions regime too. America's the only country in the world that can sanction whoever it wants, and people will jump and respond. It's a great asset in the United States. Other countries are going to have less dependency in the United States because if you have a lower trade deficit, they're getting less American dollars, actually. You're actually weakening trade denominated in the American dollar. So it weakens our ability to influence through non-military means.
Okay, just an aside, talking about Taiwan and the semiconductor industry, as something that kind of struck me, I guess it was late last week, when Secretary Hegseth was out there in Asia Pacific. He actually went much farther than almost any administration ever has in promising to defend Taiwan against a Chinese invasion. I know, at least the last time I was on this podcast, there was a lot of fear out in the Asia Pacific that because the U.S. seems to be willing to throw Ukraine to the Russian bear, that maybe they would not defend Taiwan in case China tries for a forceful reunification. I forget the exact wording, but I think from the readouts I saw, even the Taiwanese were surprised at how strong the U.S. was in being willing to sort of intervene there. And that also, I guess, speaks to another contradiction. If the U.S. is really pulling away, they're still going to be very forceful out in Asia, and then also with the strikes on the Houthis, which got all messed up with Signalgate. But again, they're still getting involved. So I'm curious how all this is going to fit.
I think so. There's a couple underlying currents here. One is a given person's level of agreement or disagreement with these tariffs is going to directly be correlated to, forget the implementation. We all agree it's boisterous, but the agreement or disagreement of the tariffs themselves is likely going to be highly correlated to your income bracket and how affected you are. If you can make a living doing podcasts, you're probably not going to care about like doing this. Like you're upset about tariffs because you haven't lost your job to shipping things overseas. But if you are part of the middle class that's been gutted and the reason Trump got elected in the first place in this whole populist movement globally, you would love to see some, well-paying kind of middle America jobs return. The second thing is from a national security perspective, it's been a quick, 4 years since COVID. And it seems everyone's forgotten about what seemed to be consensus at the time around how big of a travesty it was. We couldn't supply ourselves with health, vaccines, and all this PPE equipment and simple basic necessities to prepare for pandemics and wars and all these things. And now when someone goes on just because, he's doing it in a more noisy way and says that's what we want to do, would bring national security interests and be capable domestically, people are upset. And so I think, again, the messaging is unclear, but there's if you read beneath the motives, it's not that, again, Canada and Mexico weren't part of this release. And if you kind of read between the lines, there's potentially a hint of creating a stronger Canada and Mexico and U.S. trade bloc that puts the same level of tariffs on China and global overseas. So there's no dumping and all these things, and actually maybe a stronger. And everybody, the Trump admin knows we need Mexico.
You just said, Quinn, if Mexico, the most important consideration here is Mexico and Canada in that order, because they're the largest trading partners. Tariffs in China don't really matter. They don't. It's not even impact consumer prices. So we have to see that. And that is a good sign. Or Trump has said that he's got a relationship with the Mexico prime minister. We want to watch that. That's what the bull story starts to look like. But I do think it'll take months for this to unfold. We're still in the early innings. You've got to get deals done in a bilateral nature with with a number of those countries. But the most important country to focus on is on Mexico. I don't think a Canada deal gets done anytime soon. There's no incentive for him to get a deal done with Canada. I mean, there are incentives to lower the cost of housing, let's say, but I don't see any political incentives for him to do that.
Let me flip the script here. And okay, so the whole Trump-Ukraine thing is musical, theater. The facts are that the U.S. is basically fighting the war on behalf and with Ukraine. We are basically pressing the buttons to shoot missiles. We've supplied them all of the equipment to defend themselves that's made Russia entrench. Without the U.S., even to this day, Ukraine is toast. So there's all this hoopla around, Trump said this, they got in a fight in the Oval Office. He could pull back if he wanted to do something to Ukraine. It would be over if we brought troops back. In the Middle East, it's the same thing. If Trump didn't want trade, he would let Yemen and the Houthis and Iran run wild, not protect the shipping lanes, and we'd have inflation, and every ship would have to go around the Cape, and oil would be $120 a barrel, and we would not be protecting national interests. And then go to Taiwan. If the U.S., which I think China, by every action, will at some point make a move, fast forward 12 months from now, if this is what got companies to come back to the U.S. ahead of a global war with China invading Taiwan and the literal number one dependency of our stock market, NVIDIA and AI, coming from Taiwan, talk about the biggest national security threat possible is out of our control. And China's going to do that whether it's Trump, Biden, or whoever in office. So there's a lot here that is under the surface that doesn't get picked up in headlines that is clearly probably driving a lot of this.
There's a lot going on. First, I want to fact check you real quick on this. So the United States initially led on funding for Ukraine, but Europe has actually funded more of Ukraine military defense than the United States, about 60-40. And they picked up the baton in the last year. Now, this is from Grok. This is Elon's AI, by the way. I think Trump is so consistent in his messaging that people believe what he says. But Europe is, stepping up, as they should. But look, I think it goes back to Steve's point around great power. So it's like, hey, look, spheres of influence. We're United States. We want Panama. We want Greenland. We want line of sight on the Arctic. Russia, they want line of sight on Ukraine and the Baltic. And China wants control of Taiwan. I don't know if there's a conversation or whatever else, but that's, whatever it is the case, that's the world we are going towards. It's a world where territory matters as opposed to territory and control matters as opposed to allies and trade.
Yeah, and this is a very dangerous situation to be in. I mean, I studied this a lot, but the history of great powers sort of withdrawing, or maybe to put this in the best light possible for the U.S., retrenching to territories that are closer to where they're based, is not a peaceful and calm one. I think that the one exception perhaps is the end of World War II, which, again, Russia and the U.S., there were wars all over the place, but U.S. and Russian go to war together, and then the collapse of the Soviet Union. Thankfully, the U.S. was able to kind of step into that security vacuum and prevent another world war before. But looking at the decline of the British Empire, and also these are when one power recedes, it doesn't. Everyone else, it's a land grab for everybody else, and I can understand. I can understand the impulse to try to withdraw from some of these conflicts. Again, I used to work for the U.S. military, and most people here in this country probably don't know Taiwan exists, let alone know where to point it out on a map. So the idea of us sending troops to defend an island that no one has ever heard of just seems unfathomable. But again, it just comes down to our credibility as an ally, which has already been under duress because of what Trump has been threatening in Ukraine, and if he does not handle this cleanly, it can just lead to a cataclysmic world event. Not to be too hyperbolic here, but it can, that would dwarf anything he's trying to accomplish from a trade point of view.
What cataclysmic event do you see?
A war. It could be a war.
What kind of war? A war between superpowers or a regional conflict?
Well, I guess sometimes they can be one and the same. But for instance, if China decides to invade Taiwan, my sense is we're going to try to defend it. Will we be successful? I have some serious doubts, but we're not going to just let them go. And then what does that mean for North Korea and South Korea? And then what's like Iran going to try to do? I know they've been kind of crippled in the Middle East, but then what's Russia going to try to do with the Baltics? It can really, like, these things, because of how small the world has become, like a small conflict, things can grow exponentially. And that's my fear.
Hey, look, I think everyone's tired of foreign wars. The American economy had budget surpluses in the late 90s through capital gain taxes on the bubble we had then, which was called dot-com stocks. And then we had Iraq war, which created trillions of dollars in deficits. Then Afghan war. Ukraine spending is kind of really, it's not that much, to be candid, as compared to other things. But what you're saying is, hey, look, there's a role for leadership. And without leadership, on the global stage, then bad behavior starts to express around the world. And you get issues. And that can then cause some destabilization and drag the United States into some kind of conflict.
Yeah. And to be more specific, Ron, and we're on the right page here. If the U.S. is going to go American first, try to become more isolationist, or just retrench back into the Western Hemisphere, which is, again, Trump's right as president, there just has to be a very choreographed plan so that there's not these security vacuums that regional powers might try to exploit, because that's where something small can become something big.
The Houthis are a good example of that, right? The Houthis are creating issues with international trade, and that hurts Europe more than the United States, but they don't have the military for it. And that's what JD Vance was talking about, the signal chat.
We're right there fixing the problem. And where I differ is, I think this whole debate is a way bigger than Trump thing. It's a populism. It's a income, wealth inequality. It's a, where should we be spending our money? You know, like, and I think Trump is a byproduct of the larger populist movement as the economies have become so unequal. But I do believe his strategies can come across as erratic, but I don't think they come across as weak. And I would point to his first administration as the most peaceful years of maybe the last 12, in terms of starting new conflicts, solving things with North Korea, and so like I agree that some of these things are erratic and boisterous, and like one of the things I said today is, like, if all these countries come to the table and say, hey, we're going to stop tariffing, like, well, if the U.S. said, okay, no tariffs, you take yours, we take ours, I don't think that accomplishes what he set out to do and reshore jobs. But that would be the biggest win out of any trade negotiation. Yeah, but then also, like, with the byproduct of Europe, they're like, he woke Europe up, and he's got Europe actually thinking about defending themselves and getting smart on immigration and free speech and defense. And
it's good. I'm all for that. I agree with you, Quinn.
I think we have to delineate between result and method, and look at outcomes. And the outcomes are, I'll never forget when his first term in Syria, they did the chemical attack, and within like 8 hours, Trump had 56 Tomahawk missiles or whatever shot down, and there was not a peep out of the Middle East again. And I think I kind of view hitting Yemen and Houthis hard now to open up that trade route as a similar thing in my view. And so I just think that the broader, like, path of isolationists, America first, protectionism, populism, China looking at Taiwan, like, all these things, I think, precede Trump and are part of a much bigger global shift.
So I would say two things. One, on the populism thing and bringing manufacturing jobs onshore. I mean, there's no better proof of that than the UAW workers union at this speech, talking about loving the tariffs and bringing jobs back and reviving.
AOC loves these tariffs too.
Yeah. So, like, that's definitely a populism thing. To talk about, like, bringing a good middle class manufacturing job, I just don't know. Like, I don't know. I mean, maybe with, like, some sort of robots and AI to help, like, automate this. But, like, you're comparing a manufacturing job, like Ron was saying, a $10,000 a head in Mexico, even half that in China and parts of Southeast Asia, to people who want $75,000-$100,000 jobs, like doing those types of like manual line work, which I don't know that even the tariffs that Trump is talking about will actually bring a lot of those jobs back. Maybe it'll bring some back. But like,
it'll reshore them, friendshore them.
I think it's all politics more than everything. More than anything, even if it doesn't get things done, it's still a good look in his eyes.
We don't need manufacturing jobs. I have 3 kids. I don't want them to go work in a union and go build cars and deal with heavy equipment and machinery. Healthcare as a sector of the GDP continues to grow year after year because the elderly are growing. We need more babies. We need more kids. We need care for the young, care for the old. A nursing job can start at $80,000 a year. Within 5 years, $120,000 a year, which unfortunately adds to the cost of healthcare. But that's what we need. We need healthcare jobs as a focus.
As you said before, there is like a part of like some of the stuff we do need to manufacture in house for like if China does invade Taiwan and we're getting all of our shit from Southeast Asia and Asia in general, and those are like cut off because we're at war with them, like that's not good. I mean, Apple still gets all of its stuff from China. Like, yeah, I mean, there's a lot of real risks here. I mean, so we're gonna wrap up soon. So before I want to go to like let's go to like a little bit of market stuff to finish up, right? So like, I guess we'll go to you, Quinn. As far as like earnings, rates, I mean, we talked about the market tanking. We actually saw the 10-year yield drop to 4.1 as well. I think it's like 4.13 right now. But so like rates have dropped a little bit. Like, what is your outlook after seeing this? I want to know, like we talked about like what these impacts could be, whether or not they're going to actually do anything. But like, Quinn, what is your like over the next 6 months, maybe a year? Like, give us different timeframes. Like, what are you thinking actually happens? Like, right now we talk about the price to earnings ratio being in the 20s, and back in 2018 when Trump did all this stuff, it went down into the like 14. So like, you know, where do you think we're going here?
Yeah, I've been pretty clear, like since January, that I think we're going to a recession, and I think that for me, tariffs was like 3rd or 4th on the list of what could potentially drive that. And obviously it's creating a lot of business and consumer uncertainty, but there's Doge, there's the budget reconciliation outside of Doge, which is going to cut costs when it's enacted later this year. There's the immigration, which is extremely detrimental to growth. And you have a Fed that's behind the ball, behind the curve, purposefully delayed because they're not, Bessent wants to bring growth down and they need yields down, and the Fed is higher for longer right now. So I just think it's been a very unattractive risk reward distribution. I do think in the next few weeks, eventually this, we're at very poor sentiment levels. I do think, as Ram and Steven have pointed out, like you can't just crash things. You need to, they're trying to get a controlled burn done in the shift from government spending to private productive spending. And you can't do that by tanking the market and taking revenues. So they're going to need to get it stair step down. And part of that's going to, be some big vicious bounces along the way. But to me, I don't see a reason they take their foot off the gas and trying to enact what they believe they were elected to enact. And for me, that means lower multiples, and it means a hit to earnings. And it's something I see lasting, because with the Fed now behind, it's sort of negative reflexivity. Like, what does 125 basis point cut here do? A little, not a ton. Maybe if they get 50 or 75 because inflation comes down, it's better. But I think you're battling some quite negative inertia that's begun. And at the end of the day, probably late this year, early next year, they just do QE again, and everybody kind of sings Kumbaya and they pump assets back up into the midterms. Like, but I don't think it's from a 6 to 12 month. And I've been saying this since, 10% higher on S&P and 20% higher on Bitcoin. I just don't think it's an attractive risk-taking environment for most of the assets that have won recently.
Yeah, I'm kind of nodding my head on most of that. I think, look, you're going to get a washout very soon in a market capitulation that'll set up a multi-month bounce that we're due for. Even in the dot-com bubble bursting, you had a multi-month rally where equities almost came back to all-time highs. However, the probability that we're transitioning to a bear market, unfortunately, has increased. And it's increased because we're at elevated valuations with declining earnings growth and elevated inflation. And tariffs will exacerbate those issues. And psychology has been impacted, consumer and CEO confidence and CapEx. So I think about like the GDP equation. every element of that equation is moving in the other direction. Consumers pulling back, investments, CapEx, federal outlays are pulling back, exports minus imports, the whole thing is pulling back. You have to assess and reassess, because Trump can fix these issues quickly. I don't think he will, though. I think he believes in tariffs and wants to see what happens and go from there. So, there is a probability that you can get a 18 to 20% pullback. It won't be a straight line. If you have a large gap down and a panic washout, it may actually be viable, but you're supposed to sell rallies. I think the key thing to watch is analyst revisions. As I mentioned earlier, analysts are walking down earnings each week, and equity market prices are going down in lockstep. Institutions ultimately set prices for asset classes, not retail investors. So if institutions are pulling back, then that's going to cause equity prices to go lower. So what's difficult about the current situation is that ordinarily you would hide in consumer staples, but consumer staples are also expensive. Costco has a 50 times forward PE ratio. Costco's in a bubble, never been that expensive. Walmart's in a bubble as well, 30 times PE. So positioning is really where people should focus. Small cap value could be a good idea. International value could be a good idea. Perhaps European banks after a pullback where there's earnings growth and you have high single-digit PE ratios. I think several of the Mag 7 companies have been totally beaten up and destroyed, like Google. They're very cheap. And I think a lot of the worst pain is behind them. But other names like Microsoft and Apple are not. And Apple's probably first in line to get punished if you're Europe from a trade war perspective, punish the iPhone. So I think spending time on positioning is really important. And it's going to be a very challenging year. This is not a Q4 18 replay.
Before we go to Steven, real quick, Ram and Quinn, this is crypto and macro. So you guys didn't say anything about Bitcoin or crypto. Do you just view Bitcoin as similar to, is it just another risk asset in this world? Do you QE, liquidity, that's what we need, so it's going to really take that time to take off? Or is some of the fundamental pro stuff happening in Bitcoin actually matter? Quinn and Ram, real quick before we give it to Steve.
It's going to trade like other risk assets, and in addition to that, it's got all its good news behind it. So is my view. Like Ram said, there's going to be some really great bounces here to play. And people are going to be thinking we're so back, and that's just markets. But the long and short is if there's a negative wealth effect hitting home prices, equities, and all risk assets, crypto's not going to be able to remain insulated.
You disagree, Rob?
I had a chat with Michael Turpin last night, and I know he wouldn't mind me sharing his view. For those that know him, Michael Turpin's a kind of an OG Bitcoin investor. We got together in Puerto Rico, and his view is, we're on track with the cycle, the seasonality for Bitcoin started. I'm surprised that Bitcoin is holding up as well it is right now.
I think that's just GameStop buying now.
You can think Sailor, GME, and Marathon.
Yeah. I think overall, though, the right way to look at it is as a risk asset. I think when earnings season starts, you'll have a boost because expectations have lowered a lot. And most of Q1 was good. It was really tail of Feb and March where you start to see acceleration and weakness. So I think banks will report and they'll exceed expectations. I think tech companies will report, they'll exceed expectations. I think the promise of AI is real. People see more application. They'll see more return on AI spend. So that's the story that'll create a lift in asset prices. I think the Fed probably does cut. To your point, Quinn, I don't think it matters from an impulse perspective. It's kind of too late. It's not the case that when the Fed cuts, asset prices suddenly kind of go up in 2008. That didn't really happen. If the Fed's cutting to forestall a recession, it doesn't matter. The dominant variable is whether you have a recession or not. I'm not of the view that a recession is inevitable. So I disagree with Quinn on that. We still have earnings growth. We still have real income growth. The pace of that is declining. Yes, tailwinds have become headwinds, which is what Quinn's point is around, immigration and inflation, all the rest. Things are slowing, but we haven't rolled over yet. And Trump can still take actions to reinvigorate psychology. And clarity on tariffs helps a lot, by the way. So oftentimes, peak bad news is when markets bottom. Remember October 26, 2023, the 10-year hit 5%. That was the bottom of the U.S. equity market. Same thing happened in 1982. When you had a hot inflation print in 2024, that was also the bottom. So I think you get a flush fairly soon, and that sets up an intermediate leg up. But you want to be careful. You don't want to chase those high multiple growth stocks. Those will rally too, by the way. They'll rally also, but you want to look for the exit and rotate. Focus on dividend, free cash flow, and avoid value traps, high level.
The S&P 500 is down almost 3.5% right now. So it started a little over 2. It's gone down another 1.5%.
Well, that's called a crash. That's called a crash.
Yeah.
We've had a crash.
Stephen, any final thoughts on where you see the market going from your point of view, and anything you want to add, and then we'll wrap up. We're a little over an hour now.
Yeah, just a couple. One, excuse me, Ram. Just a funny anecdote. You were talking about how you don't want your daughters to work in a factory. I have 3 daughters. My 9-year-old says that she wants to become a nurse, and when she asks me what I do, and I say I write about Bitcoin, she now knows that it's magic internet money. But right before I went to college, my uncle used to be I guess a safety engineer for a U.S. steel plant in Fairless Hills, Pennsylvania. That's around where I'm from. And he had me be his intern for a summer, wearing the hard hat and the flame-proof clothing and the steel-toed boots, and had me shadow him and do everything that he did, so I would know what would happen to me if I effed up in college. Excuse my language. So I mean, the idea that plant closed years ago. It's never coming back, no matter what policies Trump has. So I just wanted to kind of reiterate the idea that, like, manufacturing jobs, it's just, even with tariffs, it's apples and oranges from an economics point of view. But my other 2 quick thoughts were, one, I think Jerome Powell needs a hug wherever he is right now, because he's just facing a really difficult path. They held steady this month, but people, I think, are still expecting about 2 more rate cuts. But depending on what happens with these tariffs, their implementations, and reactions around the world, at some point he's going to have to choose between supporting employment, at least that's my belief, and taming inflation. And those are, again, contradictory. I'm not quite sure what he's going to do.
We'll get the rate cuts. You'll see tomorrow markets will price in more rate cuts. One last thing is, you shouldn't panic sell tomorrow morning. The panic happened already. Like, selling in the open is not a good decision, right? Monday markets gapped down 2.5%. They closed 2% higher than the open. So what you do is be patient, wait for a multi-month bounce, reassess, and then maybe around July, when everyone's excited and they think the worst is behind them, that might be the time to rotate, take some chips off the table.
Yeah, and that was kind of going to be my last point too. Just turning back to crypto, like, I know Bitcoin is struggling. I mean, it's trailing all the major indices so far year to date. Altcoins are down even further, and it can be tough. But I would just encourage investors who are, like, some investors like to try to time the dips and the bumps, and that's not necessarily what I do, but I know you guys are experts in that. I'm not necessarily one of them. But for people to have really strong convictions about Bitcoin and I guess maybe other digital assets that are not meme coins and just completely like ephemeral assets, just keep that long-term perspective, because those types of assets will outlive presidential administrations, they'll outlive policies. And at least one good thing about Bitcoin is that it has one monetary policy and it can never change. So it's just always kind of keep that type of perspective when people are trying to think about what to do with their portfolios. And it just brings me back to something BlackRock published in December, I think, of last year. And then they actually updated. And James, I think we spoke about this perhaps in one of the other times I was on the show. They incorporated Bitcoin into one of their alternative asset model portfolios for the first time. I mean, that's a major thing. And they didn't do that wondering what was going to happen with Trump's trade or tariff policies in the middle of 2025. I mean, they have a much longer perspective to put something like that on paper. So that's just something that
I would add is that I'm skeptical that traditional cycle timing for Bitcoin is applicable here. I've never been a cycle person. I just shared Michael's view because I respect Michael and he's got a phenomenal track record, and people probably care more about his view on digital assets than I do. But yeah, I do think it's it's going to be a high beta, risk asset. What if we look back in a few years' time and we say, gee, this period of ultra low interest rates and QE and wartime deficits, of course it corresponded to the best 15-year equity run in U.S. markets. And of course it corresponded to the $3 trillion creation of digital assets. I think we're unwinding that and moving in a different direction. And so how you position has to be almost diametrically opposite of how you've been positioning the last 2 years or 10 years.
Yeah. Before I hand it over to Quinn to see if he has any final thoughts, I will say on interest rates, looking at what the markets are pricing right now, it just moved. But on futures and on index swaps, we're basically priced for at least more than 2 cuts by September, and we're overpriced for 3 cuts by December as of right now. So we're still pricing in 3 cuts for this year at the very least. Obviously that changes. We've gone up and down from there, but that's what it looks like right now. Quinn, any final thoughts before we wrap up?
No, I think I really enjoyed we had a great all angles. So good luck out there. It's a trading market environment. It's not a buy and hold momentum market environment.
Good to have you, Quinn. We'll have to have you back again. Always a pleasure, my friend.
Yeah, loved it. Thanks, guys.
Yeah, I love getting people on like you that are a lot more tactical. Like I literally am not allowed to be tactical at all, so I don't even tend to think that way. But I tend to. So my shortest term is very medium term, where obviously you are way more able to flip and flop on what's going on. Mm-hmm. All right, guys. Thanks for joining us for this episode of Bits and Bips. For those of you listening live, thank you as well. We'll be back in 1 week to discuss more about how the worlds of crypto and macro are colliding. Until then, everyone.